to flush out the auxiliary collapses that are going to occur because of accounts that, let's say, public mining companies had with FTX or other hedge funds that have obviously over the weekend gone to zero in their accounts. Now, first, I have some disclosures here, okay? Number one, I'm a paid spokesperson of FTX. I also have corporate accounts in FTX. I'm also a shareholder of FTX International and FTX US. So now we got that out of the way, I just want to make sure I'm being very transparent on this. But we're not finished with the collateral damage. And so to your question, this is a bottoming process. An event like this is very important because it's finally going to have several impacts in areas that we need. It's going to accelerate regulation, number one. As we speak, I'm at the Governor's Conference in Orlando. This is topic number one in financial services. The amount of discussion going on last night and certainly today about this situation, it's definitely going to move legislation in the House. There's no question about that. This is a defining moment. But what we don't know is how many other dominoes are going to fall yet. We need that to finish out. On Wednesday of last week, the whole world knew that there was a liquidity issue at FTX and that the hold on the balance sheet was somewhere between $6 and $8 billion. Now, I work in the indexing market for sovereign wealth and pension, and so we were getting a lot of inbound requests about information about the situation, because that's the kind of money that an institution or a sovereign wealth fund can put to work if they thought there was an interesting opportunity. And in financial services, illiquidity events or liquidity events like this can be interesting investment opportunities if you think it's a legitimate investment and it's not going to issues with the regulator. So the timeline of that conversation is I put a message into FTX. I wanted to confirm the amount being requested. Was it going to be 6 or 8? Sam called me back. Very, standard conversation. He was, rational, and we had that conversation about confirming what the amount was going to be. The amount was $8 billion. That's what they were looking for. So I went back to these various entities that were asking me about it. And by that time, the SEC chair was on the air around the world. I think the network was CNBC. And he made it clear that they were going to come down hard on this situation. So the minute that occurred, that was the end of any sovereign wealth fund's interest, because they index in the S&P 500. They have to be compliant with the SEC. And so, if you're a sovereign wealth fund making $250 million a day, the only market you can put it into to park it is the S&P. It's liquid enough to absorb that. So they don't make moves against U.S. regulators. I'm a big boy. I've seen this movie before. I will say on a personal level, and I don't think if you talk to, I wanted a platform, a robust platform where my compliance department, my accounting, my financial people in my own operating company, and our auditors could look at this and say, all right, we can understand the transactions, we can account for it, and we can report to regulators as we must. And we did. The truth is the FTX platform was very robust. It was very well designed. Hundreds of millions of dollars went into making that. They didn't raise hundreds of millions, they raised billions. The cap table has pretty well every significant financial services behemoth company on it. It was considered for a while to be the premier, compliant platform, in the sense that we had an American running it, an American creating it. That gave some people some confidence, maybe ill-advised. However, Sam Bankman Fried is an American. And he's well known, and he is, no question, brilliant. I mean, when it comes to understanding blockchain and cryptocurrencies, very few people had his knowledge and his ability to build code around it. Remember, Serum is one of his projects as well. So he's well known in the community and a founder, and for a while, saving lots of other entities by putting cash into them. Where that cash came from is under question now, obviously. The bigger question about this from the institutional perspective, and we're having this dialogue even today, is this does not kill crypto. This is one event that helps stabilize crypto. There's going to be a silver lining to this disaster. There's no question about it. It'll be called regulation. And I'll tell you why. It's not new regulation required here. You can look at any broker-dealer exchange tied in the U.S. to stocks or bonds or futures or commodities, and have regulations that are protecting investors in the U.S. market. So it's not a big stretch to have the regulators finally say we're going to apply that to crypto exchanges the same way. And I think that's going to happen. By the time this is over, because of the nature of the chain itself, we'll know where that money went. We may not know the owner of the wallet, but we're going to find out where every single token went by the time this is over. And that's probably a good thing at the end of the day. But the questions you're asking are the right questions. And so going forward is you have to ask yourself, what institution is going to put significant capital, because I've had this conversation early this morning, into any unregulated exchange? You don't even have to name names. They're just not going to do it anymore. And in fact, what we're doing in our operating company is we're taking, fortunately we have other positions that we're not in at FTX. We're taking our positions and we're moving them to Canada. We're putting them into WonderFi and BitBuy. It is the world's first regulated license issued to a broker-dealer exchange, all tied in one, under the order from the OSC. There is no optionality for commingling accounts. That doesn't happen in Canada. And in a really strange way, what I'm saying here is, it's incredible that I have to go to another country outside of the US to finally find a place where I can put significant institutional assets that's regulated. Our regulation has fallen so far behind that I no longer feel comfortable putting significant amounts into anything that is not regulated under the OSC order. That's the Alameda situation. When you build a new blockchain, you basically want to get as many apps on it as you can. What gives value to Ethereum or gives value to Polygon is the fact that there are many, many apps being developed on it. Even Miston, which is brand new, coming out of the efforts of Evan Chung that's coming out of Facebook. He got funded immediately because of the potential of how many applications could come on it. But very often what will happen, and Alameda was being touted as this, you set up an institution that supports the development of a Serum or supports the development of a Polygon or supports Solana. And that was well accepted by many, many institutions, including all the institutions that you find on the roster at FTX. They understood that was what it was for. And indeed, if you look at what Alameda was investing in, was to support the ecosphere. So for many investors, that didn't seem untoward. And that may be questioned in the future. But more importantly, it would be the relationship between the accounts at FTX and Alameda. That's what's being alleged. That's where it's offside, and that's never going to be legal in any situation unless you sign a contract allowing it. And we're going to have to find out who signed what contracts as to whether that's legal. There's so much unknown in this situation, and as you pointed out wisely, that this is like an onion being unpeeled. But from my point of view, watching what investors do at the institutional level, this is going to help quite a bit in stabilizing what the rules are going to be, because crypto's not going away. And that is still of great interest to institutions that still won't invest in it because they don't have a platform to do it on. For me, it's moving under the Canadian order. I'm going to stay there until you can show me policy and regulation in the US. All of our assets will remain there because we've got a government, the government of Canada through the Ontario Securities Commission, controlling, watching, regulating every single account there. For all the, and frankly, what's going to happen is a lot of money, institutional money, is going to leave unregulated exchanges and try and find other places like BitBuy to put their capital, because what else can we do?